The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Peter Ustinov. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We have the Dow Industrials down 44, NASDAQ off 47, S&P's off 10.5, gold contract. You gotta love it, folks. Wide price spread, accelerated volume, all of the above. Gold up 23 bucks, trading at $12.58. Silver down 12 cents at $16 and 92 cents. That's a trip. We'll go back to that. Platinum up 24 bucks at $1,256 an ounce. Copper up 6 pennies at $2.57 a pound. Light sweet crude just can't hold on, folks. Down $1.87 right now, trading at 46.61. Bonds. The bond market, folks, is phenomenal. It's just so far over the top. It's unbelievable. And guess what? It's going to go higher, folks. Okay. The 10-year out here today. The 10-year is up 19 ticks, trading out at 130.12 over the October 15th high. The 30-year up 17 ticks at 149.53, 49.30 rather. Bottom line, you have the wide price spread, accelerated volume, all of the above. King dollar. Now, King dollar coming into the close is going to be a big number here. This is why. We're 290 ticks right now. Had wide price spread out here. Went to another high, by the way, okay? And so I'm looking for the King dollar that it topped out. We're right at the high that was generated the last couple times we were up here at 92.63. Euro down 179 at 116.11, and again down 82 at 116.52. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You talk about volatility. Well, you had the good old central bank and Switzerland throw volatility into the market in an extraordinary way, folks. Last night, what you had is that Switzerland, bottom line, decided that, guess what? We are not going to hold the peg to the euro. What that did specifically, the peg was 120 to 1. Bottom line, it goes down to 82. If you happen to have Swiss currency, guess what? You're 17% richer. In real terms, you're actually 30% richer if you want to go to a couple of those euro countries. Pretty amazing. Their stock market, however, went down 9.9% in a heartbeat. Why? Well, bottom line is that it's more expensive to buy it. What did that do? That basically took gold to the moon with volume. But let's get into the S&Ps first. So if we take a look at the future S&P, this is what you have. We're pounding, folks, on the December 16th swing low. That swing low is 1965. We're at 1994 right now. You've had an expansion of volume once again in the futures. We're at 2.5 million contracts right now. Yesterday you did 2.4. You're going into the swing point out here with 2 million. We have option expiration tomorrow. What I expect you're going to see out here is this, is that we are building cars to jump the creek and get right into this 1965 area. What's unusual out here today is this, is that you had Europe finish closing up, and closing up big, folks. You had the FTSE up 1.7%. You had the DAX up 2.3%. Spain was up 1.1%. Bottom line, divergence, no doubt. What you have here, though, is that you have markets that want to go dramatically lower. If we go take a look at the SPY, what we have at the SPY is this. The SPY right now, we're at 199. And if we take a look at the cause and effect. We've been building cause. The cause we're building is to blow away this December 16th low. Right now, we've done 137 million shares, and that's light, by the way, folks, okay? What it hasn't done, and this is where it's always dangerous, it hasn't got into the swing point. It's going to get into that swing point, I suspect, tomorrow morning. That's option expiration. That's when it's going to have the juice in order to bust that swing point. We've been building cause here. We've been building cause to go after that swing point since January 6th. The NDX 100, we take a look at the NDX 100. Now, this one is really interesting because what we have had in the NDX 100 is that you're getting a slight expansion on the volume. The NDX 100 right now is trading at 99.96, and guess what? 99.96, folks, is the low of December 16th. So the NDX 100 itself is giving you a clue that this thing not only wants to get into that number, but it wants to jump the creek. So it's going to be pretty intense. IWM, we go take a look at the small caps. What you have with the small caps is this. Small caps right now also have an expansion of volume, and the small caps had light volume yesterday. We're doing 33 million today. Yesterday you did 34 million. Of course, we got an hour left in the marketplace. Small caps are also building cause to get into this 113.03 area. Right now you're at 114.83. Gold contract. We got it all in gold, folks. You had the wide price spread. You had the accelerated GCG. We had this is GCG5. We had the wide price spread. You had the accelerated volume. What you're going to see with gold is this. We took out swings. We took them out with volume. Gold has done 257,000 contracts out here today. Last swing point up here had 240,000 contracts. We have gone from 226 to 267. Right now, you're at 258. Gold, folks, is making its way up to this 1323 area, and you're going to see it fast. This is going to be a very fast move. It's a C to D of an ABC structure in the way up. It has it all, and specifically, it has it all in the XAU, the HUI. We go to the XAU. What you're going to see out here today has the volume inside it. Let me go 1 second. XAU right now you're at 57. It has juice behind the move. You're over the 75. 49 area, that's what it's trying to that's what it's trying to get over. Bottom line, you got over it. The GLD, if we take a look at the GLD, GLD, of course, is the Street Tracks Trust, trades at 10% of the price of gold. That GLD absolutely just blew away not only the swing point from December 9th, which had 10 million shares, the swing point up at October 21st, that had 4 million shares. We've done 14.5 million shares today as wide price spread, accelerated volume. Bottom line, you're going a lot higher. King dollar. Now, let's go to King dollar, because King dollar is a big number, folks. And King dollar right now, when we take a look at it, we'll see how it's teetering on closing under this 92.63 area. The price spread today has been dramatic in King dollar. We've gone from 91.49 to 93.30. And it has some juice behind it. You know, we've done 50,000 contracts yet. Now, the most the King dollar has done is actually 72,000. That was down at the 88 area. So how we come into this close in King dollar is important. You know, what King dollar has not been able to do is not been able to hold the 92.63 area each and every time it's going up there and testing it. Bottom line, we'll see where that does shake out coming into the close. We take a look at a few of the gold equities. If we go over and we take a look at Nico Eagle, what you'll see with the Nico Eagle has the juice behind the move out here today. And you're going to see these not only want to get high, folks, okay, they look like they want to get a lot higher. We take this and we put this on a daily. What you're going to see is that we've done 3.7 million shares today. It's taken into, let's see, the last swing point up here was 4 million shares. It's going to have the juice to get into that 4 million share number. We're at 31.75, and that top of that, where it's going after, is October 15th. I expect what you're going to see, it's going to go up and into that number, and more than likely you're going to get over that number. Markets, what you have out here, if we go back to the SPY for a second, what you're going to see is that the market is so weak, folks, okay, that it can't handle price, period, higher price. You go over to the financial sector. The financial sector is falling apart. Whether we start with Citigroup. Citigroup is basically releasing a huge amount of information out to us out here today. And what it is this. The Citigroup not only has blown away the October 15th swing low, you're blowing it away, and you got some juice behind the move. The October 15th swing low in Citigroup was 48. We're at 47.02 right now. If we go to Bank of America, BAC, you're going to see the same situation set up. What does that say? What that says, guess what, folks? The October 15th swing low, number 1 in the S&P, that's where it wants to go. Number 2 is bringing the probability up that you're going to blow that baby away. Because sector by sector, stock by stock, they're toasting it, they're roasting it. You stay right there. We're coming right back. Dow Industrial's down 84, NASDAQ off 58. S&Ps are off 18.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials right now down 76. Nasdaq's off 10. S&Ps are off 17.5. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
Doing great, man. Hey, that GLD's getting there for you, man.
Gotta love it. Gotta love it, man.
Totally. So what do you want to look at today?
Go report, man. Tell them to get that Go report. It's the best insurance I ever bought.
Thanks, man.
Take a look at IBM, Tom. I'm looking at those April puts on that at that 115 strike price.
115?
Right.
Oh, my God. You're a trip. Okay, so let's take a look at it. So you get Big Blue. Big Blue's trading at 154.80. You get 3 million shares out here today. So with Big Blue, folks, let me bring this back. Let's bring this back. So he's into April. We got to bring this back. First, I'll bring it back in a weekly. I got to bring it back to a monthly. Okay, so when we bring Big Blue back to a monthly, what we're looking at is right there. Oh, that's the 115. I see what you're looking at. Okay. So the highs, folks, of the lows of 208, that's where the 115.51 comes in. So you're looking at April. What do you have to pay for in April?
Tom, I think they're around 49. They're right in there around 49 right now.
49 pennies, right?
Right.
Yeah. So, man, that's a long way down. I mean, that's where I think it's going. April. So what you have is this, folks, okay? Here to have, let's see, so we have option expiration tomorrow for January, February, March, April. So that's going to give you 62 days. Average about 64 trading days. Yeah, you know, you can take a shot at that, because what would happen is this, folks, okay? What I'd actually do, Tom, I'd wait till like next Monday. This is why. Because you have option expiration tomorrow. So What would end up happening, those will get repriced on Monday morning. And, you know, the way that IBM is trading right now, it doesn't look like it's going to break tomorrow. You know what I'm saying? So it's like, okay, it's going to be the same place. You get a new pricing structure. Not that it'll change. It won't change dramatically, but it will change. And you'll probably get them for 44. You know what I mean? 40, maybe 40 cents.
Okay.
Which of course is much better, particularly because you're taking a shot like that. You know what I mean?
Right.
Well, that GLD might do it for you, man. It's going to be interesting. It's going to, you know, it looks like it's going to be a straight line move. You got everything out here today, man. I'm sure the premiums went up on that for you today too. So.
Oh yeah, it's beautiful. It's beautiful, man.
Okay, man. Listen, have a great one. Have a safe one.
Okay, thanks, Tom.
Now, folks, let's go over to our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, outstanding show Andy has right after my show. It's from 5 to 6 Eastern Standard Time. And all the programming at TFNN, folks, you can get right on your cell phone. The way you do it, just put tfnn.mobi in your browser. We have live content from 10 o'clock in the morning to 6 o'clock, from 8 o'clock in the morning to 6 o'clock at night. Then we replay that content. If you want to get Tiger TV, just do tfnn.com, hit the TV on the top right-hand corner. Andy Heck, what's going on?
Well, there is a lot going on. How are you?
I'm doing great, man. Hey, hey, how was skiing, first off?
It was good. It was good. It was good. But I missed a busy week here. It didn't stop me from writing, but very busy week. So, you know, we can go anywhere today, Tom. You were talking about gold just now.
Yeah.
And I will tell you, to me, right now, gold is a currency, and it's the strongest currency out there. And it ain't no commodity right now.
No, it showed it. It showed it out here.
It ain't no commodity, and I like it here. You know, it's the best game in town. And by the way, it's the longest running currency in the world.
Yes, no doubt. I mean, and what you have, folks, okay, as soon as the central bank in Switzerland decided that, guess what, we're not going to play the game anymore, and they're going to protect themselves. What they specifically did, folks, they protected themselves. And the Swiss franc has always been the strongest currency. Well, no, I can't say always, but Andy and I know when all the currencies are out there. Swiss franc was the number, right? You know, and it just goes to show that the gold and the Swiss franc were moving. They're moving the right way. So
absolutely, and I think what the Swiss did today is they told us very clearly that the ECB will do quantitative easing.
Yeah,
and that euro, I think the euro is going to continue to plummet against the dollar.
That's going to be to me, that's still the number. You know, I mean, you know, it's so crazy, man. I mean, remember, I was bringing up the fact that, you know, hey, you know, what's going to make the dollar pull back? And it's like, who knows? Maybe, you know, it's our central bank that comes in, turns around and says, hey, I got to nail that lower. So I think we'll see where this shakes out. But in that context, I suspect there's going to be more surprises. I suspect specifically, folks, is that all the central banks right now are all going to be going different ways. That's what we seem to, you know, the Swiss are basically saying, hey, guess what? Real wealth, I had it with the rest of this deal, and, you know, we'll see where it shakes out.
I mean, listen, if you get the U.S. Fed raising short-term interest rates, if you get the ECB doing quantitative easing, I believe we'll see dollar-euro parity, you know, in 2015.
Yeah.
So we'll see how it shakes out. But let's talk about industrial commodities, and let's talk about copper, because copper, Tom, is the new oil. Copper this week, Monday, it went below the long-term June 2010 lows, 270,
right.
Closed above it, and then Tuesday and Wednesday, it was, you know, flushed that one away. Got down to, you know, lows of, let me just take a look over here, 240, 235.
Yes.
We're currently at 257, still comfortably below the support, which is now the resistance. And quite frankly, Tom, I believe for three reasons that copper is going much, much, much lower. I give three muches.
Okay.
The first much is because of Chinese financing. There's a lot of copper tied up in Chinese financing. The lower it goes, the lower the collateral is worth, the more margin calls, the more they have to sell. That's the number one reason.
Nasty.
That's number one. Number two, producer strategy, Tom. Producers, dominant producers, are all, if you look at iron ore, if you look at coal, if you look at oil, in all of these commodities, the lower the price goes, the more dominant producers, the low-cost producers are selling. Because for two reasons. Number one, they want as much cash flow as they can get. And number two, more importantly, they want to build market share when the higher-cost producers fall by the wayside for the next cyclical bull market. It makes sense. So I think that selling will continue in copper from producers the lower it goes. And third, it's an industrial commodity. And look what happened to oil and iron ore. It's telling us, I think, you know, it's a bold call here. I think copper goes to $1.50 to $1.75 a pound.
Oh, listen, it's already into the 2008 bar. So once you're into the bar, you can suck it down in a heartbeat.
It fell off a cliff, and I think it's ugly. And you got Red Kite, a big hedge fund in London,
right?
$2.6 billion. Well, probably slightly less now. Still long a boatload. Wow. And stocks are rising on the LME. So look, it doesn't look good for copper.
You want to stay with me?
Absolutely.
You stay right there. We got Andy Heck and Tom O'Brien. You stay right there, folks. We're coming right back. Don't forget it, TFNN. Get us right on your cell phone, TFNN.mobi. Dow Industrials right now down 51. You get the NASDAQ off 52. S&Ps are off 14. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are down 46. Nasdaq's off 50. S&Ps are off 13.5. And, folks, if you haven't test drove the Nadex platform, this is a perfect time to do it, folks, because your trade is your stop. High volatility markets, great trading platform. Come over to our website at TFNN. See the Nadex banner on the right-hand side of the top. Hit it. They'll put $25,000 of paper money into your account, and you'll be off to the races. We're talking with our man, Mr. Andy Hecht, and we are talking markets, and we're talking commodities. Hey, let's talk. When you were out there skiing, we had a couple of your clients, no doubt, followers, including myself. You had natural gas come off that bottom, man.
It came off hard, huh?
It came off hard.
I like the performance today, too. I really do. Look, I've been long suffering with some natural gas positions, which I bought scale down.
Yeah.
They're coming back now. I have told my subscribers and others that instead of a stop, I was going to use something different this time. I'm using a time stop, and it was either a Valentine's Day massacre or Valentine's Day love.
Yeah.
So we still have about a month to go here.
Right.
We're in the winter. We bounced nicely. We had a nice draw today, 236 BCF.
Okay.
We're still about 11% above where we were last year. We're still 3% roughly below where we were for the 5-year average in terms of inventories. It is all about the weather.
Yeah.
But this market action, Tom's interesting. You have a lot of bearish sentiment in natural gas. So what you're seeing here is, I think on this pop-up, we moved from 280 to 330. Now we're back down to 320. Actually, it's down as low as 305 today. I think people are getting short in here, and that could provide the oomph for natural gas to go up to fill this gap on the charts that you could see here that starts at around the 340 level up to about 348, and perhaps go higher.
Well, see, you know what I love? I mean, you know how when I put this price and volume together. So
yes.
What we have in natural gas, and this is a classic, folks, okay, is that you are pushing. Now, it didn't hold price, but guess what? You had monster volume, man. And that just means you're going to be right back up to 329. You know, this thing wants to go. This thing wants to me, it wants to go at least 365. You know, we'll see what happens up there. But
I agree. I mean, I think it's going to go higher, but it does depend on the weather. It does depend on the weather, but it is an interesting market. Now, the other thing, can we talk oil for a minute?
Absolutely.
All right, so I wrote this article that I just want to talk about with you. I don't know if you got a chance to read it. I sent it to you. It was called Crude Oil Bottom, What to Look For. Where are the clues for an oil bottom? And in the article, what I do, it's on Seeking Alpha if anyone wants to take a look at it. It was, I got about 30,000 reads on this particular article, which is a lot for commodities. Basically, what the article says is that oil is not bottomed yet. I mean, we see that in the action today. We got up to 51.27, and now we're trading back down at 46 and change.
Yes.
So, there's a lot of action. There's a lot of volatility. But what you got to do is you got to look at the time spreads, that have gone from backwardation to big contango.
Yeah.
You got to look at the crack spreads or the processing spreads for turning oil into gasoline and heating oil. And you have to look at the Saudis naturally and certain other action. And I describe it in the article. And this is the thing. These are the things that are going to give you a clue as to when oil does bottom. Now, I suspect, Tom, that given gasoline prices at $1.30 a gallon wholesale here, that driving is going to pick up this driving season.
Oh, it's definitely, you know why? I mean, think how cool this is. When I work out with Nico every morning, we start talking about it. Everyone's going to take a drive. It's fun.
Right. Right. And you know what? Hey, oil has dropped huge. Listen, the interesting thing, Tom, check this out. Oil has dropped more since June than the price of oil is today.
That's intense.
Right. That's intense, right? So,
excuse me.
So, it can't keep going down at this, pace, or it's going to go to zero. And it's not going to zero.
No.
It's never going to zero. That I would bet my life.
32 is pretty good, though.
Well, it's possible. It's possible. But you know what? I'm not in the business of picking a number where it's going to go to, whether it's 32, whether it's 38, whether it's 40, whether it's 42. Andy Hall said 40. I'm going with him. I've seen him be right so many times. I think he'll be right. All right.
Yes.
I go with him because I've just seen him get it right.
I don't blame you, man.
Right. I mean, if there's a god in the oil market, he's the one.
That's a fact.
But anyway, what I'm seeing in oil, and what we will see in oil, is that when gasoline demand starts to pick up, crude oil prices will stabilize. I think the volatility we're seeing, where we're actually getting some rallies here, is kind of a good sign here, even though it failed miserably. The fact that it was able to rally. Listen, we haven't rallied in months.
And what you had today, folks, is that the contract went to higher high, and the volume committed. So that's saying it wants to basically bounce. That's
right. So look, that's why I'm hating copper here, because I think that has huge downside. crude oil, I think that the vast majority of the move is over. Listen, if it goes to 32, it only drops another $14. Tom, we've dropped more than $14 in the last 2 months.
No, I know that, but it's still another 25%.
Absolutely,
yeah.
No question about it. But it's important for everyone to be watching this market and to know what to look for that bottom. When the spreads start to narrow,
okay,
it's going to be interesting. Now, tanker stocks are really interesting still here because that big trade in oil is still going to be buy the physical, store it, sell it forward, and if you have enough capital and you're a big enough player, you can do that trade, and that trade is an ATM. It just yields you money. And
yeah, if you actually look at NAT, folks, Nordic American Tankers, now it's down today, but it's beautiful that it's down because you got a high volume high at 202. You're pulling back with light volume. It'd be nice if this would pull back to like $10 or something because this is a strong stock.
I could see that stock going to $20.
Yeah, no.
I could see that stock going to $20 if this contango. This is a play on oil contango because the other thing about these tanker companies is that the longer the contango stays here and the wider it goes, they just raise their daily storage rates, which means more revenue for them.
Yeah, that's pretty.
There's no more costs. There's just more revenue.
I know.
And look at the dividend that sucker pays.
Oh yeah, no, there's no doubt. There's no doubt.
That's a nice one.
There's no doubt. Well, listen, man, you have we look for the show in all of an hour and a half.
Yeah, I'll be here. I'm looking forward to it. I'm looking forward to your guest in the second hour.
Yeah, big time. In fact, folks, our guest is Chris Gaffney. He's the president of Everbank World Markets, and what a day to have him on.
I was going to say, Tom, the perfect day to have him on to talk about currency. Oh, my God. They're big currency players, and
right.
I'm looking forward with bated breath to hear what he has to say about the dollar.
I know, man. And folks, this is very unusual that you have a currency move like this. You know, it's interesting, Andy. Stay with me for a second, actually.
Sure.
Because what I've found is that currency dislocations are the largest problems for markets, period. Now, we know that Switzerland's folks are strong, but Switzerland is small. That doesn't mean that within a couple more days, though, we're going to have a couple funds that have actually blown up. That's it. It's over.
I was just going to say that, Tom. There's blood on the streets.
Right.
That thing gapped. And there was no chance to get out.
Right.
Stops. You got a stop in there that got hit. You got your fill at a very ugly level. And believe me, these big currency players, they don't play. Their positions are not $10 million. They're in the billions. There is some blood out there today. And I heard it when on CNBC before they interviewed the head of the IMF, Christine Lagarde.
Yeah. And
you could see anger in her over the Swiss move because the Swiss did this without consulting anyone.
That's smart.
It is smart.
It's smart.
They did the right thing for their currency.
Right.
But you know what? The euro is so beleaguered here, it wasn't the right thing for the euro. Certainly. Wasn't the right thing for the euro.
They're all animals, folks. That's why it's the shark business.
Predatory.
Big time, man.
Have a great time, Tom.
Have a great
one,
man.
To you soon.
Thanks, Andy. Have a safe one. So don't forget, folks, Andy is right up after my show at the 5 o'clock hour. Bottom line is that what you're going to see out here coming into this close is that we have the Dow right now down 45. NASDAQ is basically getting beaten. It's down 55. The S&Ps are off 15. What you've done here, folks, is this. You're building cause to basically blow out the December 16th swing lows. That's how this is set up. If you haven't test drove my newsletter yet, this is a great week to do it. We have a special that's going on. It's only till Sunday. You can test drive the newsletter absolutely free for 1 month. Normally it's 2 weeks. If you do the test drive, you're going to get my book, which is an $88 value, absolutely free. We send you the book so you can understand the whole system. What you're also going to get is next Wednesday night, I'm going to be doing a 1-hour workshop. What that workshop specifically is going to be on is the bond market, the S&P, and gold. I'm sure if you've been listening, you know that I'm a bear. That isn't what we're going to be talking about where I'm thinking it's going. But what I'm going to give you is the parameters for bullish and bearish at those particular swing points. So if you want all of that for absolutely nothing for the test drive, check it out on the front page of TFNN. Dow Industrials right now down 57. NASDAQ is off 57. It's a big number. You know, when you talk percentage numbers, folks, that you're talking a whole different ball game. 57 to 57. Dow Industrials, that's only down 0.3. On the NASDAQ, that's 1.2%. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are down at 72. You get the NASDAQ off 63. S&Ps are off 18. You get an expansion as we're coming into this close, folks. On price, we bring the S&Ps up for you a second. We take a look at this baby. This is going to get interesting coming into this close because, you know, what we do have is that most times, you know, with things as nasty as they've been, meaning coming down so quick, you know, we can get a few little bounces. I've seen intraday out here today on a continual basis is that this market just cannot hold price whatsoever. The low out here for today inside the future market is the 1985 level, and let's see, we get 8 minutes coming into the close here. Of course, for the futures, that's open to quarter past, but you're coming in with juice, man. This thing's going to go right after these swing lows out here. It's not going to take much to blow them away either. The last 10-minute bar that we had out here did 38,000 contracts on the way down. Thus far, we're already at 23,000. You know, so this little baby wants to get into it. If you want to see something that's just absolutely incredible, it's the 30-year bond, folks, and the 10-year bond. Okay, it's just amazing, actually. If you take a look at the structure inside it, this is actually just, it's the 10-year bond right now is yielding 1.7. You know, if you need mortgages, folks, go get them right now, okay? That's going to put the 30-year at about 3.8, okay? The 30-year bond, our 30-year bond is at 2.378. So check out what that means. That means that folks are lending the government 30-year money at 2.3. If you remember what folks are saying about the 10-year, most analysts saying about the 10-year, they're saying the bottom line is that they thought that the 10-year basically was going to be up at 2.3 right now. Forget the 10-year, folks. These bond markets are going dramatically higher, and the yield is going to be dramatically lower. You know, this very well could be an ABC structure on the way up on the 30-year, which would just be crazy because they had to bring it to the 170s. Bottom line, it's out there. If we go take a look at it, if you want to see acceleration up with the 20-year plus, the TLT. The TLT has it in spades out here. The TLT is trading at 135. The TLT, of course, is the ETF structure for the 20-year bond plus fund. And you know what? This is not stopping. You know, man, this is just pretty amazing. No doubt it's amazing. We go back into the S&Ps just coming into this close out here. And what you're going to see, they're throwing it in. We just got down to the 1886 level on the S&P, 1886.50. This is going to blow away the bottom, folks. It has plenty of time to blow away the bottom. Coming into option expiration tomorrow. You're coming into a Friday. You're coming into option expiration. What that is opening wide is opening the low of December 16th. And what you had, all the clues are out there. What I'm specifically talking about is that you've already had J.P. Morgan take out the October 16th low. Let me just make sure that I'm telling you. No, it's right at it, okay? J.P. Morgan is right at it. JPM, that's right at it. That'll probably take it out tomorrow. Bank of America, BAC, I believe, has taken it out. Yeah, Bank of America has taken it out. Citigroup has taken it out. The banking structure, oh yeah, Bank of America's blown it away. Look at this chart. You know, we're at $15.15. It basically took it apart, the 1543 area. Citigroup, same deal with Citigroup. Citigroup, the low was 48.11. You're at 46.95 right now. The one sector, and you can get ready, because it looks to me, I'm in Mitch, one of our tigers in the den, says, is the IBB ready to fall apart? And it looks to me like this is it. The IBB, folks, that falls apart. You're going to see the NASDAQ and the NASDAQ 100 get taken apart so fast and so furious. It's amazing. What the IBB has done today is that it's gone from 318 to 307. That's normal, by the way. Okay, it can go up that quick, too. Bottom line, though, this couldn't hold highs. You have the high volume swing lows, and when we're at 307, the 247 to 257 area is, in fact, the area where it has a high volume swing low. All of these equities, you know, if you're looking at your portfolio, get stops in. Why? Because gauge the October 15th swing low. I've been talking about it for a while. Bottom line, you've had plenty of equities already hit it. You've had plenty of sectors already hit it. You're not going to stop here. The S&P is going to be down there. And that S&P, by the way, folks, okay, if you think it's bad right now, the S&P is still at 1998. The October 15th swing low is 1820. So bottom line is that you're going to build cause to get down to that level. Will markets get extended down there? No doubt. Gold market, you're in the gold market, God bless you. Bottom line, gold's moving with wide price spread, accelerated volume. The gold equities are. That's going to go higher. And as Andy Heck was, we were just talking about it out there, is that gold is showing flat out. It's a currency. Now, what the difference has happened here is this. What has also happened is that in the world of currencies, the Swiss franc has turned around, and the Swiss Central Bank has turned around. They put the gauntlet down. They said, guess what? We have a currency, a strong currency. We plan on continuing this strong currency, and we don't care what the rest of you central banks have done or will do. It's a big number, folks. And the gold market in general is showing that, guess what? We're currency, and what are you going to do? It's supply versus demand, and anyone that knows anything about inflation or deflation more than likely is take an insurance policy out, and the insurance policy, we can 1 ounce, 2 ounce, 10 ounces. Corporations, lots more. Individual operators, lots more. Bottom line is that you have a currency war out here, and what you also have is you can have huge currency dislocations. Could you imagine if you woke up in Switzerland today and you're not in the stock market and you just have currency, guess what? You're 30% richer going right across the border in Europe. If you're in the euro, guess what? You're not going to go visit Switzerland. It's not even close because it's just so expensive, it's unbelievable. If you're hedged and you own some gold, guess what? It doesn't matter. Bottom line, gold's up in all terms. All terms, including, folks, the U.S. dollar. The thing that's amazing out here today, as we come into the close, even that the dollar was up over 550 ticks. Right now, it's only up 210, and gold still went to the moon. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And don't forget, at TFNN, we start live programming every trading day at 8 a.m. And you can take us right with you. TFNN.mobi. Stay right there, folks. Come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine that it's already there. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials finished down 106. NASDAQ off 68. Got smoked. S&P's down 15. Gold contract up $23.80, folks. Wide price spread, accelerated volume, trading at $1,258 an ounce. And we get a special guest that's coming up at 4:30, folks, and that's going to be Chris Gaffney, the president of Everbank World Markets. Great day to have him on. He's going to be bisecting and dissecting those world markets for us. Silver, it's trading at $16.88. Platinum up 24 at $1,257 an ounce. Copper Down, copper's up 6 pennies rather at $2.57 a pound. Light sweet crude just can't hold price, folks. Light sweet crude down $2.30, trading at $46.17 a barrel. Bonds, the everyday bond market, folks, phenomenal, okay? We had the 10-year up 27 ticks at 130.19. Had the price spread, had the volume, all of the above. 30-year, folks, up a full 0.7 ticks at 150.20. And those markets, folks, the yield is 1.7 right now on the 10-year. You want a mortgage, go get it right now. That should bang out at about 3.8. The 30-year, folks, has never been this low. The 30-year is at 2.3% for 30-year money. Pretty incredible. King dollar. What do we have with King dollar? King dollar is out there at 92.53. Euro is at down 176 at 116.13, and the yen is down 93 at 116.40. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's go there first. What do we have? Well, it's pretty intense. You're coming into option expiration, folks, and you're coming in with some juice in the marketplace. Market's down 900 million out here today. The futures, we did 25 million contracts. We're at 1992. The swing point from the 6th, we did 20 million contracts. Bottom line, you're going after, and I expect we're going to go after this tomorrow morning. And what you're going after, folks, is that you're going after the December 16th swing point of 1961. We can take a look at the SPY, the correlation inside the SPY. This is the correlation inside the SPY. The SPY right now is at 199.02. That is at the low of the January 6th mark. That's going to be going after 197.86. The NDX 100. We used the 3 Qs for the NDX 100. That just blew it away. I mean, it's pretty intense. NDX 100 is trading at 99.65. That is under the swing low from the December 16th area. Has some juice, going to need more volume, but bottom line, that also is going to be making a run down to the October 15th swing area. The October 15th swing lows, folks, are the benchmark all over the place. I will get into the financials in a bit. What you're going to see inside the financials is just basically toasted those October 15th swing areas. What that says, that's a heads up that guess what? That it won't hold. Gold contract. What do we do with gold? Gold had it all out here today, folks, okay? You had the Swiss National Bank turn around and said, see you later. I'm going to get rid of the peg to the euro. That was this morning. Brought chaos into the currency markets in a heartbeat. Bottom line, Swiss franc goes much higher against the euro in a big way. Gold follows right through. Gold did 261,000 contracts out here today. Got to a high of 1267.20 with volume. Wide price spread, accelerated volume. Gold's on its way up to this 1298 area. Big, big number. Bonds, as we were talking about a little bit earlier, bonds are just amazing. You take a look at this bond market out here, and they not only went higher, they went a lot higher. The TYH5, this is. The 30-year out here was trading up, well, the 10-year was trading up at 28 ticks at 130. The 30-year up 109 at 150.25. We take a look at the small caps, the IWM. What we did with the IWM also came lower, has juice behind that move. What I expect you're going to see in the IWM is this. We're going after the same type of swing points. The IWM is at 114. That wants to go after 113. And what's wide open is down there at that 104.86. So you're coming into option expiration tomorrow. Option expiration, of course, you can have much higher volume characteristics, and that's exactly what I expect you're going to have. Now, let's go over to the XLE. Oh, no, we got to go to oil next. So we take a look at oil. Oil also couldn't hold price out here today. You had light sweet crude. It's trading at 46.24. We'll see whether this oil can get a bounce. I mean, the bottom line, it should be bouncing, but you know what? Just like the equities, can't seem to hold price at all. Not even close. The oil contract got to 51 today. We're trading at the 46 area right now. Go over to the financials. Now, the financials broke down. You know, it started with JP Morgan Chase yesterday. They came down with volume. The XLF broke the swing point from 23.68. That swing point was December 16th. We are going down to the October 15th swing point. If you want to, when you're looking at markets, folks, what you're always looking for is that you're trying to glean information out of it, because you always have leaders, you have laggards, okay? Bottom line, we go over to Citigroup. We see what happened with Citigroup out here. Citigroup has just gone from 56 to 47, absolutely blew away the October 15th swing point. That swing point was 48.11. Right now, Citigroup is at 47.35. We go to Bank of America, BAC, same setup. Bank of America has just gone from 1850 to 1530. Monster volume, by the way. Bank of America just blew away the October 15th swing point. That swing point was $15.43. We're at 1550 and has it all. We did it with volume. That saying going much lower. JP Morgan, that's approaching it. JP Morgan actually started everyone down. JP Morgan is trading at 54.99. That swing point down there is 54.28. In fact, this is a lower close, not a lower price. JP Morgan, I expect what you're going to see in the next couple of days, that also is going to blow that baby away. What hasn't broken yet, but looks like it's going to break, is the IBB. Once the IBB breaks, folks, what you're going to see the NASDAQ 100, you're going to see the composite get taken apart in 2 seconds. The IBB today went from 317 down to 307. What does it have? Well, hanging out here in a huge way is the 247 area. High volume, has it all down at those areas, meaning that it looks to me that it not only wants to get into that area, it looks like it's going to just take that area apart. We go over to the large integrated oils, ExxonMobil. ExxonMobil still hanging at these lows. Exxon has already hit the October 15th swing low. We take a look at the XLE, that energy sector in general. Energy sector is below that whole deal. We're at 72.86, and the XLE, that was 77.51. Individually, what you have out here, folks, is this, is that individually you have many equities that have already broken the October 15th swing low, when in fact the S&Ps are still dramatically higher. Goldman Sachs is coming out with their numbers tomorrow morning. Goldman has just come down from 196 to 178. What is wide open, which is going to be just a mind blower, is 171.26. That is a high volume swing low. Let's see exactly what time Goldman's coming out with their numbers. They're coming out with their numbers at 0730. So you can see what you have happening out here is that these benchmarks are being hit. They're being hit, and this is the key that you want to take away from this. If you're long and strong, get stops in, because the financials are hitting these swing points, and they're hitting them with accelerated volume. The volatility is in this market, and it's in this market in spades. I don't expect it's going to come out of this market also. Bottom line, you have the wide price spread, accelerated volume as you're going after these lows. Dow Industrials finished down 106. NASDAQ was down 68. S&Ps were off 18.5. You stay right there, folks. We got a special guest coming up next. We got our man, Mr. Chris Gaffney. He's the president of Everbank World Markets. What a great day to have him. We're talking world markets, we're talking currencies, we're talking metals. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 106. You get NASDAQ off 68. S&Ps were off 18.5. And we got some juice on the way down here, folks. We've done $879 million on the NYSE. When we take a look at the NASDAQ is down $1.9 billion. We will have Chris on at about the next break. I was misplaced saying on this break. Next break, he's going to be coming on. And you can go over to everbank.com, folks. Again, you're going to see a lot of the different products they have. And we're talking about currencies. We're talking about metals. We'll have Chris giving us a review of these world markets, because last night we had action in an incredible way. And if you hadn't heard about it yet, bottom line is that the Swiss National Bank released the cap on the Swiss franc versus the euro. It was 120. They released it. As soon as they released it, folks, it basically got so strong, it was incredible. It went down to 82. What that specifically means is that if you woke up in Greece, in Switzerland, and you were not in the stock market, you were just in currency, bottom line, you're about 30% richer. You can walk over the border to another Euro country and big money. If you happen to be in a Euro country and walk over to Switzerland, however, you are basically toasted. What that currency move did, of course, was put high volatility in all the currencies and the equity markets across the world. Their own equity market was down 8.67%. The reason being, of course, is why? Is that you have to own francs in order to buy into the Swiss market. Bottom line, what that did simultaneously, it took the Swiss market stronger. Currency-wise, it took gold dramatically up. So after the close out here today, folks, Intel, INTC, Intel just come out with numbers. Intel closed at $36. The low for the year is 23. The high is 37. Let's go take a look at Intel here and see what we have. So INTC. Intel closed at $36.19. She is trading at $35.75 right now. The news on Intel goes like this. Let's put this up. So there she is. So Intel sales forecast missed estimates. Intel, the largest maker of chips that run personal computers, forecasts first quarter sales that may fall short of analyst estimates, sparking concern that the PC industry is heading for a steeper decline. Revenue is $13.7 billion, plus or minus $500 million. Bottom line is that you have, you know, Intel is, you know, you're down slightly. It's still hanging at the highs, though. I mean, that's the reality out here. SLB, I believe Schlumberger just come out. Let's just see if we got Schlumberger, SLB. Schlumberger closed at $76. Numbers go like this, and their earnings per share beat, their revenue missed. Okay, that's not going to be pretty. That's never pretty when you miss the revenue number. We put this on a daily. This is an equity that has already got smoked from $112 down to $76. Schlumberger fourth quarter numbers was earnings per share was $1.50 versus $1.46, so they made that number. Revenue, they have they have a devaluation charges from foreign currency of $1.27 a share. That's a big number. They repurchased. You want to see something? You want to see someone blowing money, folks? They repurchased 12.1 million shares in the third quarter, and versus 13.9 million shares in the quarter before that. If you happen to be looking at my chart right now on Tiger TV, what you're going to see, folks, that means they've been buying all the way down. You talk about spending some money and seeing it go south. That is absolutely incredible. There's no two ways about that. Pretty intense. We go over and we take a look at some of the high-flying, well, they used to be high-flying tech stocks. If we go, we take a look at Google first. What you're going to see is that Google is also going, it already broke its October 15th swing low. That swing low is 518. You're at 504. Google, folks, looks to be doing another ABC structure on the way down that it just wants to basically take apart a lot lower price, not a small lower price. Inside the Intel, of course, that is going to push many of the other chip makers south. SanDisk is one of the first ones that came out a few days ago with their numbers. SanDisk not only got taken apart, SanDisk went from a price point of $98 to $78 in 5 trading days. What SanDisk has also just done is taken out the October 15th swing point. Now, let's go into the gold market. We take a look at the XAU, the HUI. What you're going to see is this. XAU out here today, you went up from 74 to 78. We have the price spread in the XAU. You have the volume inside the XAU. We're at 77.21 right now. That's over the swing point of 75.49. And more than likely, it looks to me, folks, that the XAU, the HUI, both are ABC structures on the way up. We get into the GLD. Now, the GLD is the Street Tracks Trust. That trades at 10% of the price of gold. The GLD out here today did 17 million shares. Gapped higher. We're at 120.94, and it absolutely just blew away that swing point. Now, that's on a technical basis. On a fundamental basis, and this is what you're going to get. This is where these ETF structures are just amazing. Watching, if you're inside the ETFs, folks, when you're going higher and you're own the ETF, it's great, because what ends up happening is that the sponsor of the ETF, okay, has to turn around and buy, in this case, more gold, okay? So watch what happens when this happens. When you have something like that happen, what does it do? Well, as the ETF, and we're going to know what these numbers are in probably another half hour, because what happens is that the ETF structure itself comes out and figures out how much gold they have to buy. So they have to buy physical gold. As they buy physical gold, what ends up happening? More juice goes in the gold market tomorrow morning. Because gold went so much higher today, there's a lag inside the GLD for a day to 2 days. Bottom line, I expect you're going to see that fast and furious out here today. What you also have happening in the gold market, and this is pretty intense, is that the gold market, of course, has been getting smoked. Well, the gold market's been off the lows since November. But prior to that, for a year and a half, you've been getting toasted and roasted. The correction was pretty intense. You know, and the gold market itself had taken out its 50-day moving average on the 5th of January. Okay, that's when we went from, yeah, I'll actually put the contract up for a second for you so you can see the contract. So on the 4th of January, we took out the 50-day moving average. Guess what, folks? What we did today, and let me see how, we took out the 200-day moving average. And the last time we were over the 200-day average when it broke down was all the way back in September. You take out both of those averages, what does it say? It says, particularly, what I like to see them when you're either taking prices out in the top or the bottom, is has it done it with conviction? Conviction is wide price spread, accelerated volume. You stay right there, folks. We're going to be coming back with our special guest, Chris Gaffney, who is the president of Everbank's World Markets, and what a great day to have, because we have high volatility in all these markets. Go to everbank.com, and we're going to be talking about, he's got a great, the Daily Finning, folks, is absolutely great reading every day. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 106. NASDAQ was off 68. S&Ps are off 20. And, of course, we were talking about the Swiss National Bank. They dropped their peg. And what a great guest we have. Perfect timing. We have Chris Gaffney. Chris, folks, is the president of Everbank World Markets. And, of course, if you haven't been over to Everbank, this is a great time to do it. Go to everbank.com, and you're going to see their specialty, folks. When we're talking currency markets, when we're talking commodity, when we're talking metals, you know, and when we're talking foreign currencies, there's so much that's happening right now. You know, it's the end of the year. If you're looking for a great IRA and you want to put currencies and or metals, particularly metals, into that IRA, great time to do it. Chris Gaffney, welcome back to TFNN.
Well, thank you very much. It's great to be back.
I'll tell you, what a day out here. And, of course, you know, folks, when you Google, Chris writes the Daily Finnick with Chuck Butler, okay? It's a great way to wake up in the morning, number one, if you want to know what's happening around the world. And Finnick is spelled P-F-E-N-N-I-G. So, Chris, talk to me about, first off, the Swiss National Bank and, you know, what exactly happened out here last night?
Yeah, it was a huge surprise move by the National Bank. Back in 2011, the Swiss National Bank decided to peg their euro or peg their Swiss franc to the euro.
Yes.
What was going on was with the euro sovereign debt crisis, the Swiss franc was getting a lot of inflow of capital and forcing the value of the euro higher as people were trying to seek a safe haven or a shelter away from the euro, which was in a lot of problems. Well, since the Swiss economy depends on trade with the eurozone, it was making things very difficult for Swiss businesses. So the Swiss National Bank stepped in and pegged their currency to the euro. And they would come in and defend that peg, and they were actually keeping the value of their Swiss franc down in order to keep it at a 1.2 to the euro, and they were having to spend a lot of money defending that peg as the euro dropped. They would have to force the Swiss franc down in line with the euro. Last night, they decided to give up that peg. They're quick defending it, and immediately the Swiss franc jumped. At one point, it jumped 30% versus the euro. It settled back down to around, I think it's up about 13% when I walked away from this trading screens today.
Yes.
So it was a pretty dramatic move, and the key was that it was unexpected, totally even 2 days ago, I think the Swiss bank president was saying that they were going to maintain that peg. So it was totally unexpected by the markets.
You know, and I saw that quote, and it was 2 days ago. It's pretty amazing. It was an amazing quote too, folks. That you know they're not changing it. That this is very important to them. You know, when we talk world markets, Everbank is that's one of their specialties. And I was looking at some of the foreign currencies you have, and particularly the metal accounts, because what did happen out here today, which hasn't happened in a good period of time. I mean, gold's been off the lows of November, but it looks like gold start moving. You know, it had the wide price spread, had a huge amount of contracts come in today. And this would be going back. I'm going back whether it's 15, 20 years ago, but the franc was always one of the strongest currencies in the world, and gold started moving with it today.
Right. We saw big moves. I think a lot of it was safe haven.
Yes.
Giving up on. There's a lot of mistrust of central banks now, and of course, central banks are running things right now. That the markets have been held hostage, if you will, by the central banks and what their expectations are. And now I think some investors finally said, you know what, I need to go seek some shelter, and they went into the hard assets and gold in particular.
Now, when we talk about Everbank, can you talk to us about how the metals accounts work? You know, because it's at the end of the year. I know there's, me personally, I'm in the gold market, okay, and in particular, after today, it's like, wow, this is really turning into, when I just brought up 20 years ago, what I used to do in 1980, Chris, right, is I moved a lot of airline tickets, and of course, there were so many different currencies that you had to know all the currencies, particularly because I had an office in London too, okay? And when the Swiss bank did it, I said, oh my God, this is they're leading. They're saying, hey, I don't care what's going on. They're going to defend it. Well, I guess they lost the defense of their currency, but they're going out on their own.
Right.
And
they were pushing it down.
Yes.
So now they just said, you know what, we're not going to keep trying to force it down. We're going to let it go to a more what the market thinks is the value of their currency.
Right, which is great, right? Realistically.
Right. On the metals, again, it's a great way for diversification of an IRA. And what we offer is American Eagle coins that you can hold in your IRA. So you can hold gold, silver, even platinum in the form of coins into your IRA, and you're able to purchase those coins, and we'll hold them in your IRA account here at Everbank. And for non-IRA holders, we've got unallocated accounts, which are actually, probably the most popular accounts that we offer for metals here. And we've got four different. We've got gold, silver, platinum, and palladium. And I think it's smart to have a portion of your investment portfolio, overall portfolio, into the metals. It's an asset class that's non-correlated with other asset classes, and it will spread risk. It actually reduces, by adding non-correlated asset classes, you're reducing the overall risk of your portfolio. And again, metals are an excellent way to do that.
Yeah, there's no doubt. And the proof is no doubt in the pudding, meaning that one central bank is going out on their own. What do you think about the aspect? You had Lagarde was out there today, and other central bankers. They didn't seem too happy that one central bank went on their own. Now, with your experience, that's unusual, isn't it?
Yeah, and again, I think it caused investors to question the credibility of central banks in general. And I think that's what really, usually you've got central banks that will absolutely try to telegraph their next moves to investors. Investors don't like uncertainty.
Right.
I mean, in general, investors want to at least know what the rules are or what the, yes, they'll operate, and every investor wants to go into a different asset class or make their own decisions, but they need to know what the ground rules are. And here you've got a central bank that, had said these are the ground rules that we want you guys to play by, and then 2 days later, they ripped the carpet out from underneath you. So yeah, it was it's kind of calling into question the credibility of central banks everywhere. We'll see from the ECB now next week. That's the focus now. Is a lot of people think that the Swiss National Bank somehow knows what the ECB is going to do.
Yes.
And the question there is, of course, for your listeners, is are they going to institute full-blown quantitative easing? Are they going to start buying sovereign bonds? And most investors think they will, and that would be, of course, a positive for those that look for more stimulus and the equity markets in Europe if they do, but it would be negative for the euro. And so what the thinking is that the Swiss National Bank saw that coming down. Yesterday we had the European Court of Justice give tacit approval to that plan by the ECB to buy sovereign debt. So, maybe the Swiss National Bank said, look, we're not going to go out there and spend hundreds of millions of dollars forcing our currency down to keep it level with the euro at the 1.2. We're not going to do that anymore.
Yeah, so, the freight train,
when
right?
When the ECB, if and when they decide to do QE, we're going to be separate from it. So, I think
in that context, you have foreign currency accounts. I mean, I'm sure that there may be some people out here, and these are so unique, folks, okay, that if you think that, the franc is still going to go higher, I mean, they can go over to everbank.com and look at the foreign currency accounts you have and deposit money in the U.S., and you convert it into whatever currency they want, right?
That's exactly. We've got 20-plus currencies that we deal in, everything from Swiss francs to Chinese renminbi to we've even got Russian ruble accounts if you want to really speculate. So, you choose what you want to go into. You purchase at a competitive exchange rate. We'll hold the currency for you in a cash account or put it into an FDIC-insured CD. Now, the FDIC insurance just protects against bank failure, not against currency fluctuation.
Sure.
So, of course, these accounts are going to fluctuate with the underlying currency, but that's the whole reason you're going into them, is to take advantage of currency fluctuations.
Absolutely. Listen, folks, Everbank's phone number is 855-750-4051. That's 855-750-4051. Or just go to everbank.com. And don't forget about the Daily Finnick, folks. It's free. Get over there. Each and every day, as Chris is just going over these world markets, you can read it every morning. Either he's writing it or Chuck is writing it. Chris, thank you so much. You have a great night, safe night. We look forward to having you back and give us a great education again.
You bet. Always a pleasure.
Thanks so much. You stay right there, folks. We'll come right back.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Back, folks. Dow Industrials finished down 106. NASDAQ off 68. S&P's off 23. And don't forget, folks, if you'd like to go over and take a look at exactly what EverBank has to offer, you can give them a call at 855-750-4051 and just go to everbank.com. You're going to see those accounts that we're talking about, whether it's the allocated or unallocated gold, silver, platinum accounts, and the foreign currency accounts. The way the foreign currency accounts work, folks, is that you would tell them what type of currency that you want to own. Bottom line is that they convert it right there and then, and it's going to be intriguing watching how this whole Swiss franc deal does shake out, particularly because what we do have next week is that this decision by the European Central Bank is going to be made one way or the other. And thus far, what Draghi has done, who's the president of the European Central Bank, he has talked a good talk without a stick. That's been going on for over 2.5 years. So it's going to be wild watching this whole thing shake out. I suspect that it's coming, and it's coming in a big way. And that was a preemption by the Swiss National Bank, and that they were smart. That's the bottom line, because they would have got run over by a freight train. Because this is what the difference is. What the difference is that when that gets done, is if in fact that peg was still there and the market thought that they would have to keep buying, bottom line, that can break a bank, it can break anything, okay? Now, of course, the Swiss National Bank can print money that's a fiat currency. Bottom line, they preempted that, saying that, no, we're not going to do that anymore. You're on your own, and we're going to be on our own. And what that does specifically for their economy, it does make their economy much more expensive. So the exporting of Swiss, which whether it's Swiss watches and all that, gets a lot more expensive. There's no doubt about that. That's one side of it. The other side of it, though, meaning the amount of wealth that they just created inside their country is huge. That's what it really comes down to. And the biggest part that I see in all of this is, what did they just do? What they just did is they protected their currency, they protected their citizens. That is more important than the rest of this deal. And that's something that when I just brought up with Chris from the president of Everbank World Markets. That was a normal occurrence, folks, when we had all the different currencies in Europe, okay? It was always the Germans and the Swiss that would not basically weaken their currency whatsoever. Once they got into the euro, bottom line is that things have changed dramatically. Things have changed dramatically flat out since the downdraft in 2007. What you have is, since the downdraft of 2007, it's been a run to the bottom in currencies. It's been an experiment out here, and, we'll see how this shakes out. What has happened, I suspect, I think in general is that, they saved us from the cliff. There's no two ways about that. We'll see how this is going to shake out for Europe, though. Europe has a lot of problems out here, a huge amount of problems. Inside the currency market, inside the commodity market, what we absolutely saw out here, and I'll bring a couple of these up. So if we take a look at some of these gold stocks, what you're going to see, if I put Gold Corp up, when we talk about wide price spread, we talk about accelerated volume. Well, it had it all. Gold Corp out here today, it got its act together in a big way, and it needed it, by the way. Gold Corp, had come off the bottom of 17 and, was trading up there at 20, but it hadn't had a real good sign of strength. We had that sign of strength out there today. We did 24 million shares. We went from 21.32 to 22.93, and that is a beauty. And this is what you're always trying to do, folks, is glean market information out of equities, out of sectors, so you can see, okay, do we have strength come into this market? Do we have buyers? That's what I'm always looking for. Are there buyers or there sellers? Well, Gold Corp, a few of these other gold stocks today, not only have buyers, they have buyers in an extraordinary way. When Gold Corp had come down, the last leg down, which is always a heavy leg in any market, folks, we had come down with 21 million shares. That's October 30th. We went up today on 24 million. That's what it takes when you're wiping out lows. That's exactly what it takes. So Gold Corp right now Gold Corp, next leg up, we'll take it to probably 24.63. You're at 22.69. That's on the short term. Larger term, folks, all these gold, silver equities are going back to the August 15th highs, and that's a big number. That number there is on Gold Corp is $28, and from the move to the move, it's a good one. It's $18 to 28. You want to see a few others that you talk about price spread. Rheingold Resources, GOLD. This is a big one. This thing likes to move beyond belief. Rheingold is already up from 60 to 80. Okay, it's a one-way move. What you also have, though, guess what? Huge volume. We did 2.2 million in Rheingold today. Rheingold is trading at that 79. That's going to be running to the 84 level. So you have the price spread, you have the accelerated volume, you have all of the above. You want to take a look at another smaller one that has had an incredible run. It is Goldfields, okay? Goldfields, okay, just pretty amazing. Goldfields came off a bottom of $3. You're trading at $5.50 now. And this is no penny stock, folks, okay? When you take a look at Goldfields, when we talk about cash flow, okay, it's an incredible cash flow. You're talking about they take in $33 billion with the B. $billion. Bottom line, stock got smoked like the rest of them, but guess what? You're off to the races in this equity right now, and if we take a look at this on a longer-term basis, what you're looking at, let me put this on a monthly for you so you can see what we're looking at here. Goldfields is trading at $5.69. You know, your swing points are up there at 15. You just got back in, as soon as we got back inside the $3.99 level, that is one of those classics that you can't bust it down, you're going to bust it up. The 2008 lows, folks, was $3.99. You had volume of 224 million. We got below that, we got to 292, and we did 123 million. Now what you're going to have, and you can see this quite clearly from last month. Last month, you start pushing higher with monster volume. I love it when I see that. We had pushed higher with 139 million shares. Thus far, this month, we've already done 76 million shares. This baby's on the way. It's a big move. It's an extraordinary move. Don't forget, folks, I'm doing a special right now for my daily newsletter. It's a great deal. You get 1 month of my daily newsletter, Market Insights. If you sign up for it, this is only good till Sunday night, this Sunday night. If you sign up for it, you get the Art of Time in the Trade absolutely free. That's $88 value. Plus, you come to my workshop next Wednesday. It's a 1-hour workshop. You stay right there because I'm Mr. Andy. Heck is going to be coming up growling and prowling with you. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great night, safe night. Look forward to speaking to you right here tomorrow morning. Stay tuned. Andy's coming up, folks. Go get him, folks.